morning, everybody. You know what day it is. It is Fundamental Wednesday. Welcome back to the Everyday Growth Advisors live stream. I am glad to see you back here. We have had a pretty interesting trading week. If you remember, what a week to even discuss Roku, right? I mean, I think it's the perfect week. Somehow we have been picking these tickers on the right day, which is kind of weird. Last week we picked Boeing, and Boeing kind of moved a little funny. And yesterday I bought some BABA and some Boeing calls. BABA's doing extremely nicely pre-market. And you know, this week we picked Roku, and Roku's kind of moving a little bit this week as well. So interesting times. We're picking some good stuff. So keep the picks coming. You can see that a collective voice makes a big difference. So welcome back to the stream. Thank you for being here. We do this every Monday, Wednesday, Friday. And we break down the markets for you so you don't have to. You can sit back, relax, and enjoy a stream that's beautifully curated for your eyes and your eyes only. Remember to like if you haven't and subscribe if you haven't. So we're going to go through our regular programming, which is the news. We're going to go through a little bit of the pre-market movers, give an update about the SPY technicals, and then we'll jump back into the fundamentals of Roku. And boy, do I have some interesting stuff to show you. All right. I hope you guys are ready. So let's dive straight into it. Not going to wait because we have quite a bit of work to go. For people that are just streaming in, welcome into the stream. Good morning to you. The US-China rivalry is broadening from trade to everything. This is what the news is saying. There is, once again, geopolitical issues between India and China. Indian and Chinese, the US and China, and India and Chinese too. And now they're starting to pull back troops from the border that they were having issues with. This is what Bloomberg's reporting. And then, yeah, there is not really much market news over here. Kanye West says he no longer supports Trump. Damn, that was a quick switch. I don't know about that, man. But yeah, why Singapore has one of the highest ownership rates? Whatever. Google, Amazon funnel over 20 million to virus conspiracy sites. Oh no, that sounds bad. Okay, the world's cruise ships can't sail. What to do with them now? These are like mostly opinion stuff. So let's see, is there anything else over here? Nothing really much. Let's look at Wall Street Journal. We have global stocks waver while China rally powers ahead for the 7th day straight. Chinese stocks are up. I've been talking about Chinese stocks for a while now, saying that, you know, they're undervalued and that we should be buying into them. And now the market's starting to roar, right? Chinese tech firms get trading boosts from Hong Kong listings. Pandemic slow show private equity funds closing in first half. Okay, wow. And let's see. COVID still poses a challenge for financial system. Douchebag fined $150 over Epstein link. Okay. And in other news, there was also that Berkshire now owns, well, Apple now makes up 43% of Berkshire's portfolio. Which, you know what, it's not, people think it's like a kind of a big deal. Apple is a relatively low beta stock. Well, it's not low beta, but it's market beta. So its beta is close to 1. The correlation factor between Apple and the market is almost 1:1. So as you guys know, when SPY moves up $1, Apple moves up $1 along with it. So there's a pretty big correlation factor there. Other than that, Alibaba's Ant plans 200 billion IPO. Auto sales for China dropping. Let's see, maybe NIO might be affected from that one. Not sure if it will be. NIO's been kind of yeah, there you go. NIO would be affected. Neo's been rallying as a sympathy play, pretty much, but also they had surprising numbers. So Buffett continues donating Berkshire shares. Nikola up 8% after JP Morgan talks. Okay. All right. Well, let's see. Novavax still up again. Crazy stock. Nikola down. All right. Let's see the pre-market movers real quick. Let's have a look at these. Neo up 6% once again on Chinese, the Chinese tech rally. Let's see what else here. Nothing. What is this? Nano Versidites. Okay. Nokia. Ooh, haven't heard about that one in a long time. Dow Jones. GE with 1.37 million shares bought pre-market. Something's going on with that stock. S&P 500. GE as well. CCL up about 1%. Nasdaq with Tesla up again once again about 1%. Micron also up by 0.75%. And okay. So today we have another, let's see, 9:30 we'll have Seawell Cushing report. Once again, oil related news. Crude oil inventories coming in at 10:30, which will be possibly market moving. So keep that in mind. And that's your pre-market update. We have SPY now kind of consolidating at this level here. So we had an impulsive, corrective, but then now we're starting to make, we need to see a kind of a retracement back here, if anything, right? I want to say that, you know, we're kind of in a channel here. So we may continue to be in this channel. There's a high chance, right? I say there's a high chance that we come down to test at 38.2 somewhere here before again bouncing back up. As I've mentioned many times before, we're not gonna go on one of these like this. It's impossible. There's always impulsive and corrective waves. The market never goes up in a straight line. So remember, these are the moments when you can start to hedge, right? Hedge your portfolio if you're expecting a move downward. I would say that 38.2 would be a soft landing here. If not, we would go back to test the 50 or 61.8. This would be a hard support here. Or if the market just wants to defy all odds, then we could just go rippity dippity, right? We'll see. But SPY has still quite a way to go to all-time high, and for good reason. The Nasdaq's like kind of just doing its own thing, right? The Nasdaq's like, hey guys, you know what? I'm gonna chill over here. You guys do what you're doing. I'm just gonna keep climbing. Well, this is because majority of the economy is made out of, majority of the great stocks that are part of our economy now are tech stocks. And Nasdaq, even though it doesn't fully track all technology, it tracks innovators and disruptors. And these often end up being tech. So many people have a misconception. Nasdaq tracks all kinds of stocks. In fact, there are about 3,000 stocks in the Nasdaq. So now with Nasdaq kind of hovering around here, I expect Nasdaq to also go through kind of a little bit of a correction so that we can have a next rip up, right? A nice correction would be at 23.6 fib retracement. And let's see if that will actually come true. Actually, I need to draw this fib out a little bit more longer. Let's see if I can get this to shift. Okay, I probably can't, but I'll redraw it later. But it's going to be roughly that level anyway. Not a big difference. It'll be around this zone here, which will be the next support, right? You can see this is a previous resistance here. This is now going to become a new support, right? So expect the Nasdaq to come down to here, if anything. kind of find its support and then see if it wants to break up or go further down to test this next level. This would be the next level here for support, and that would be the 10,200, let's say, right? The interim right now would be 10,350, I want to say. Yeah, somewhere around there. So those are the levels to watch. Bullish or bearish, I think that we're more likely to be slightly corrective than the rest of this week. And then, have a kind of another rally once again. Because this rally that's going on right now, it was pretty quick, right? You can see there's a pretty big buildup of bearish candlesticks accumulating now. Usually a sign before the market falls a little bit. So keep that in mind. This is a good spot to accumulate a few hedges. I would say, UVXY, I would say TLT. Well, TLT not so much, but yeah, you could get TLT as well. I think gold's at an all-time high today, someone was saying. Yeah, follow me on Instagram. I actually put out a post today. What you can do and what you can buy when you are in a bearish market, okay? We're not in a bear market per se, we're just in a correction, okay? So this is a correction. This is not a reversal. The difference is that we are still on a uptrend and we're correcting downward to the moving averages before we take another rip up, okay? So looking at both NASDAQ and SPY, you can see the clear difference. And the Dow Jones is still lagging behind here. So out of all of them, this is the index that really needs to move. And industrials are a major component of the Dow Jones. That's the reason why it's a major lagger, because majority of industrial companies are still not coming online because of COVID. So I say the right place to put your money right now is in industrials, right? You rotate out of tech, rotate out of the high risk stuff, and start rotating into industrials. That's the reason why I bought Boeing yesterday. I like, even though it can go further down, I like where it is right now. So that's where I would start to accumulate my positions. Look at industrial stocks that you like, Caterpillar, Boeing, the leading stocks, and get those, right? Start to rotate into industrials. That will be a good play right now. Okay, let's see if we have some good questions here before I continue. Welcome into the stream, guys. Make sure you smash the like button. I appreciate you guys being here for Fundamental Wednesday. We're going to go through ROKU here in a second. Good morning, good morning, good morning. Good morning. Okay, Tesla, good morning, good morning. Okay, cool. Buenos dias. All right, cool. All right, so let's do ROKU real quick. I know majority of you are here for ROKU. And let me just show you what I go through usually, right? So first things first, when you're doing fundamental analysis, if you're here last week for Boeing, I'm showing you guys an infographic on how you can do a nice fundamental analysis on a company for those who are here for the first time. But let me show you what that infographic looks like so you know what I'm talking about. Now, for your FA, you generally want to look at a couple of metrics, right? So the first thing you want to look for is whether there is a increasing revenue from this company. Okay. Is revenue increasing? That's the question. Then, does the company have a stable return on equity? Does the company have increasing operational cash flows? What's the management style of the company? Does the company have an economic moat that is superior, a competitive advantage? And lastly, does the company have any debt? Now, not all debt is bad. Some debt is good. Just not too much debt. Debt that you can't service is bad, obviously. Okay. So we're going to run through these steps and we're going to see how ROKU does and performs on these metrics. So the first thing that I want to do is pull up Morningstar. And this time, don't worry guys, I pulled up the right stock. This is ROKU. Last week we were looking at Facebook by accident. And let's look at the revenues, right? Remember that this is a relatively a new company, okay? So if we look at the revenues and the income statement here, you can see the company probably only IPO'd, yeah, actually it was around from like 2000 something. But they've only started to turn revenues positive very recently. Okay, these are in billions. So they're at this moment they're kind of turning approximately increasing revenues. So their revenues are increasing, but I want to say at a pretty slow pace. Okay. What's a little alarming though is the cost of revenues and how quickly cost of revenues are increasing along with the revenues themselves, right? If your business is growing cash flows, but then you spend a lot of money growing those cash flows, that's kind of a worry. From a shareholder perspective, that just means that there's less for me to take, right? So you gotta look at that as well as how revenue is growing. It's a relatively new company that's turning revenues positive. Okay, they've been operating at a loss for a long time. Now look at the EPS history of this company. Okay, they have literally never had a positive EPS. Okay, literally never. Look at it. It's negative all the way. Okay. Now this doesn't mean that the stock is bearish or that the stock is worthless. It doesn't mean that at all. I'm just saying that they are not returning money to shareholders just yet. Okay. It doesn't mean that they're a bad company. It just means that they're taking a long time to grow. All right. And that doesn't mean that it's a bad company. It just means that you have to be aware of such things. You have to keep this in the back of your head, because if you don't know this information, then you're buying a stock blindly and you're trading it blindly. And there's a difference between blindly trading something and knowing something about a company that you're trading. Okay. Now, next we look at ROE, right? Does the company have a stable ROE? Now look at the return on equity. It's actually negative here, right? Why? Because the company's not returning any earnings per share. So if the company's not returning earnings per share, obviously the equity is going to be negative, right? Now, I just want to bring out to you that in this specific sector that ROKU is in, you got to realize that the average company has, which is the entertainment sector, by the way, this is the sector that they're in. So you can actually go to Stern. I use Stern NYU, which is a scholarly approved kind of a repository that gives you the ROEs based on the market sector. There are 107 firms in this sector, and each of them adjusted for R&D and non-adjusted for R&D gives an average of about 15 to 16% in ROE. Now ROKU, you can see ROKU's underperforming in its sector hugely. Okay, once again, still doesn't mean that it's a terrible stock. Okay, remember there are things that are called future value and premium that you pay for a stock. For example, Tesla, right? Company's not really like returning a whole bunch of money to shareholders, but it's still valued at $1,400, right? So there are certain things called future value that a stock would have that inbuilt. Okay, now return on invested capital is another thing that we look at. Another important component, which means that every dollar that ROKU expenses of its capital, how much does it get back? Well, it gets back it gets back $12.63. Sorry, negative $12.63. So every $100 they spend, they get negative $12.63. Okay, I'm sorry if I made that confusing. Maybe, yeah, it's just easier if you look at it $100. If they spend $100, they're losing $12.63 to grow their capital. Okay, which means that right now they're in a phase where they're spending a lot of money to grow revenues. All right. Now, however, look at the revenue growth, right? 41% 3-year annualized. So over 3 years, they are growing at a 41% growth rate, which is great for the company. Now, the thing about ROKU is that you have to think of ROKU as like the very early on Apple of the over-the-top business. Okay, so unlike Netflix that just focuses on selling shows, okay, ROKU has two components. Well, actually, it has three components. So not only does it make money from shows, Okay, it can air shows, and then shows pay them money, so that's revenue. They also have ads, so advertisement revenue. And the third is they have a platform, which are Roku TVs, and they have Roku devices that allow you to, basically view Roku stuff on it. Okay, so they have a pretty diversified model. Now, think about it like Apple, right? You remember how they had to build an app store, which is the Roku platform, okay? And then they kind of sold all their products, right? Like, let's say, the watch, right? The phone, and then the, what else did they have? MacBook, whatever, right? I'm just giving you an example. Well, Roku is kind of in the same, it's trying to do the same thing, okay? So it sells these platforms, and the platforms allows them to monetize these other streams of revenue like ads and shows, okay? So the more platforms they sell, the better for the business in the long run, because they're converting their revenue stream from a kind of a active revenue stream, which means they have to sell lots of TVs or sell a lot of devices, to a passive stream where people are watching those devices and making money from all of these streams, right? Okay, so think about it that way. Okay, that's how the business model is of this company. Okay, once you understand that, you can kind of get a better understanding of what Roku does as a company and how it's operating and stuff like that. Okay, now the next thing we want to look at is operational cash flows, right? How much money is the company gaining from operations? So let's look at the operational cash flow real quick. These are numbers pulled from the balance sheet and the income statement, so we don't need to go look for them. Okay, so net cash flow from continuing operations. Let's see, operating activities here. This is what we want to see. So is it increasing? It kind of has been stagnating, right? If you think about it, it was kind of like at minus 32, and then in 2017 they had positive cash flow, and then in 2018 they dipped like almost half, and then now last year it was at 13.71 again. So this company is kind of raising cash from operations, but then they have a pretty high expense for the cash. Okay, in fact, how high the expense? Look at the cash flow from investing activities. So ever since 2015, the cash flow from investing activities have been grotesquely crazy. Remember that these are numbers in millions, okay? So they're taking on more leverage as the business is going on, okay? What does this mean? They're borrowing more money. They're burning through a higher cash load, right? And this number has increased almost 20 times or more, almost 22 times since 2015. So this is a highly levered company, okay? So that's one thing. Now, leverage is not a bad thing if your company can sustain leverage. So how do you see if the company can sustain leverage? Well, you look at the interest coverage. Now that's bad, right? Look at the interest coverage. It's minus 32.8, right? Which means to say that the company is in a hole that it's trying to climb out of, okay? Now, this company is borrowing lots of money, has a good growth rate, and currently is facing significant headwinds from the COVID-19 crisis. The debt over equity is still not bad for shareholders. The debt levels are not above 1, which are still okay. Remember, when debt starts to climb higher than 1 over equity, that means the debt is heavier than equity. Right now, it's able to fund its debt through equity. But very soon, this will be a problem, especially since they don't have enough cash to cover interest charges. So the company has to make changes to the way it's doing business. This is the issue and what has caused the stock to sell off. Okay. Let's go here instead. Now, the quick and current ratio look good here. The current ratio gives you the 1 year assets over liability, immediately liquefiable. They have more assets than liabilities. The company does have a substantial amount of goodwill on their balance sheet. And so if you look at I was looking at the shareholder letter, right? You can see that from, okay, so first of all, look at the active accounts. Those are growing nicely, right? That's nice. Streaming hours also growing nicely. And then the average revenue from per user. So average revenue per user, ARPU, is also growing, right? Which is good. This is all contributing to a good future value of the company. The problem goes into the increasing expenses of the business. Okay, part of the expense of the business this past quarter were here. Okay, so look at this, written by management. Following a strong Q4, ROKU sales growth, blah blah blah, remained very healthy year to year, despite some supply chain and retail disruptions. Okay, we saw extended factory closures after Chinese New Year, but since then, factories have gradually ramped up production and currently operating at close to normal capacity. We continue to rebuild stock levels to meet the increased demand, which has required a greater use of higher cost air freight than originally planned. Now, if you go and read the balance sheet and the income statements, you're going to see that their higher cost translated to roughly 50% higher cost. Okay, now that's quite a higher cost. I don't know about you guys, but if suddenly the thing that I was buying has increased by 50%, imagine what that does for margins, and imagine what that's going to do to your earnings next quarter. Okay, so what they had to do is, because of COVID, they couldn't ship anything out properly, so they used air freight to do it, which costed the business in the short term. And they say that they expect elevated air freight costs to continue in the short term, which means that for the next quarter, expect ROKU to definitely have increased operational expenses. So with that being said, there's a high chance that ROKU would have higher expenses this coming earnings report. Okay, especially with its existing condition. Okay, now the saving grace of this company is the fact that its revenue growth is at a superior level, right? But for shareholders' perspective, this doesn't look very great. Okay, now if you look through this entire report, you'll see that the company is performing overall pretty decently with revenue growth and with its advertising growth. But then also the management warns on the fact that advertising has been slowing down. Okay. And then they also made a purchase which landed a significant amount of goodwill on the company's balance sheet. Now, what is goodwill? It's what you basically pay more for in a stock when you are buying a company. Okay, so look at the consolidated statement of operations here. You can see that the platform revenue is increased nicely year over year. Player revenue is increased year over year. Total revenue is increased nicely, right? And then look at the cost of revenue here. This is what I was pointing out. Okay, from 40 to 100,000, from 65 to 77. So they had a lot of increase in cost over here. Okay, this is a substantial increase in cost, guys, for a company that's going through a lot of debt. Okay, remember these numbers are in thousands, so this is 101 million, jumping from 40 million to 101 million a year later for the same quarter. Whereas your revenues jumped like, I don't know, 100,000, and your expenses jumped like, I don't know, 60,000. That's worrying to me. Okay, you're growing your revenues not proportionally to your debt levels, which is that's worrying. Okay. Now, from operating expenses wise, look, the research and development costs have gone up as well. They're trying to build new products and stuff like that. Sales and marketing almost double, more than double here. Okay, 1 year later, which is fine. That is a justified cost. Okay, general administrative costs also up. That's fine, right? We know businesses need this kind of money. I'm looking at it from a shareholder's perspective. Remember, okay. So I would say this is okay if you can sustainably tell me that what kind of research and development they're doing, right? This is all okay. The main thing is that they have an increased cost of debt that they're not able to service. Okay, Now that is the issue. So you can see that the amount of goodwill that the company has built up over time is a substantial amount, almost $70-some million. And remember that goodwill is a intangible asset that needs depreciation as well. So over time, this the intangible asset will have to be amortized away or depreciated away, depending on how the accounting standard is. And over time, that will be done through the years. Okay. Cash position seems like they're raising cash, and accounts receivable is down. Prepaid expenses are up, so that net kind of cancels out a little bit. Okay, so that's kind of like a little idea on how the company is doing. Now, in terms of cash flows, you can go look at this at your own time. Excuse me. I don't want to spend a lot of time going through these because some people might get a headache looking at this, but if you go look at this, the summary is that the operating activities are causing quite a loss for the company, while investing activities, you can see purchase of property, plant, equipment, causing a huge rise there in a negative cash flow activity. And then look at the proceeds from borrowing, and also they have increased cost of borrowing. So these are all contributing to the bottom line growth of the company. Okay. Now, if you use Finbox, you can actually do your own DCF valuation. I did a 10-year DCF model here using the Gordon growth exit. The revenue and EBITDA is pulled automatically, and we're projecting the growth to be about 30% and then 34, 36. You can change all of these values to whatever you want. Okay, I felt like these values were okay. And then, growth starts to slow down in 2024, 25, 26, 27. And then we use a sustainable percentage of revenue for EBITDA. Okay, CapEx expenses forecasted out also at a moderate level. And what is CapEx? It's going to be your capital expenditure. Okay, your working capital is going to be also forecasted out in a reasonable manner, 4%, 4.4%. Depreciation and amortization at about 1% per year off, and then the tax rate we're going to take at a effective tax rate. The discount rate, I set the in fact, actually, it probably would make sense to make this 13%, and then make the mid-level at 10% is fine, and the low could be 8%. So the discount rate is going to be the rate at which their forecasted cash flows will be discounted to present value. Okay, so what we do in an intrinsic value calculation, which is the discounted cash flow model, we take all cash flows and let's forecast it out into the next 10 years, right, into the future. And so let's say it ends up with a ending a terminal value. Okay, well, what we do is we use a discount rate, which is the weighted average cost of capital. We call this the WACC in finance, and we discount this value by the discount rate to get a present value of the stock. Okay, now while you're doing this, you need to have a assumption. So we use a high, a mid, and a low point for the discount rate. Now the discount rate on the high side is slightly higher than usual. The average WACC for a company is about 10%. Okay, we say 10% of the company's cash flows are used for operations. So because COVID-19 would have caused increased expenses, I put it at 13% for kind of annualized over the 10 years, which is a fair value estimate. Okay, this gives us a terminal value of which ends up with a fair value estimate of the stock at $159.89. That is the intrinsic value of the stock taking a 10-year growth exit. Okay, the stock price is trading at $130, so you have a 22% upside based on the cash flows of the business. Remember, this will change quarter to quarter as the company puts earnings out. Okay, so now you can understand why investors are not as bullish as you would want them to be for this company. Okay, at some point of time, Roku was doing extremely well, and that caused the stock price to pop all the way to 180. And now it's starting to, kind of show cracks between the surface. So investors are being wary, and that's the reason why it's trading so weirdly. Okay. So that concludes our fundamental analysis. I hope that was informative. If you found this informative and you liked the whole breakdown, throw a couple of fire emojis, honestly. I would appreciate it. And make sure you like the stream. That would really help me out. I would appreciate if you could click the like button. And if you liked what I did today with Roku and you liked the entire breakdown, then go ahead, throw a couple of fire emojis so I know. Okay, nice. Now, the economic moat and management style, which I didn't go through. Okay, so we went through depth. Management style, you got to read the 10K to find out more. The economic moat for this company is relatively well placed. It's a wide moat because they're not on the same industry or sector as many other companies, and they have a diversified revenue model. Okay, so keep that in mind. But yeah, I think that concludes Roku's analysis, and I hope that you guys like that. Okay, so let's do a couple of tickers now. Appreciate you guys being here, by the way. Alrighty, let's get it. Neo 11 call 710. Wow, you guys love the weekly contracts, don't you? You should be in the money. I think you should take your profits and run. That's what I would say. This looks very bubble-like. Sell today, man. Sell today. Don't wait till Friday. Don't wait till Thursday. Your contract's gonna drain theta today. It's gonna drain theta today, so don't do that. I don't recommend. T, I'm looking for a new entry on Microsoft. Me too, man. Me too. I want to say, okay, let's look at Microsoft real quick. I want to say I would like to enter Microsoft at about 204-ish, this level here, right? The nice, this would be the old, this would be the old resistance. And I would like to see Microsoft validate this level as a new support. Once it validates as a new support, I'll take some calls for long-term calls at Microsoft right here. Okay. That's my entry point for Microsoft. Earnings run up. Okay. Good morning. Good morning. Good morning. Tesla, July 17. $1,000, $200 put. Ooh, wow. Ooh, wow, wee. 1,200, July 17, that's next week. Man. I want to say possible, but then, I mean, you definitely won't get to 1,002 though. I say 1,003 is more possible. You probably like bounce somewhere here. Tesla's going to consolidate in this region here. But I don't think that you'll get to 1,200 by that date. So I say hold it and, try to squeeze as much as you can out of the contract, but don't hold it for too long. I would say sell it by Friday. Definitely sell it by Friday. Don't hold on to it. Walmart, 122 calls, expiry 717, and 126 calls, expiry 710, both in the money. Well, if it's in the money, take the profits, bro. Take the profits and run. If they're both relatively short expiries, I say take the money and run. Roll it out into a further contract if you're really confident. Good morning, everyone. Apple 377.50, 724. Finally, somebody who's not taking weekly contracts. 377.50, 724. Yeah, you could hold that contract. I think Apple's looking bullish. Let's see how it's doing at extended hours. Yeah, I mean, yeah, you should be fine. I think you're good. Hold that contract, man. I think it's a good one to hold too. Snapchat 25.50, 724. Just a quick golden nugget for you. Try to avoid buying strikes with the 0.5 in it. They are less algorithmically traded, and they will end up having higher expenses. Just my personal view and what I've observed. Might not be true, but from my observance. Try to go with whole numbers. Snap. 25.50, 7.24. Yeah, that's a good one too. Hold this one as well. As a matter of fact, if I can get an entry here, I might take Snap. Looks interesting. Definitely looks interesting. Good morning. Boeing 185 calls for July 17. I am in Boeing long-term calls, but I have 210, I believe. It's possible, but let's see how Boeing behaves, because it can take a while. But I say this is a very strong support zone. So let's see what happens today. I say it could come down here. I'm willing to hold Boeing and be patient with it, even if it comes down here and bounces. So I think your expiry is a bit too close, Jonathan. If you're here for the first time, make sure you click subscribe. Welcome into the stream. We do this every Monday, Wednesday, Friday. Today we did ROKU's breakdown. On Friday, we'll pick a new stock and summarize what happened in ROKU. Remember, the summary of the stock was that the company is going through really big cash flow issues. They have lack of funding. Business is over levered, and at the same time, revenues are growing. So it's kind of a in between. Remember to watch out that the next earnings is definitely going to bring a negative to their a further negative to their EPS because of the increase in operational expenses. Okay. What should we Google to learn more about rotational market trends? Could you tell us? Well, you can't really Google that. It kind of comes by experience, man. And personally, it just takes time to understand what the market's going to do, what the market's rotating into. I mean, generally, you can try and understand, like, when tech rallies, other things are selling off. And if you go to Finviz, actually a good way to look at it is you go to Finviz every day, okay? Go to Finviz every day and look at this chart during market hours. Look at it at the start of the day, record it down. What changed? Look at it the mid of the day at 12 p.m. ET, record what changed. Then, and I'm saying go sector by sector, right? Technology, communication services, consumer cyclical, consumer defense, healthcare, financial, industrials, real estate, utilities, basic materials, energy. Record all of those down and record how it changes as a sector. And then at the end of the day, record one more time. If you diligently do this every day while you're trading, you will understand the pattern. It just takes a bit of hard work, that's all. Okay. Okay. Good morning. Welcome in. AMD 53 call 710. Back with the weekly expiries. You guys love these weeklies, man. I love it. Well, I don't love it, but if you lose your money, the only thing I can say is I told you so. 53 calls, sure. If you want to play it, hold it, man. I mean, for me personally, I would never play that contract. Never. I would never play it, unfortunately, man. This contract's going to be dead by Friday if it doesn't stay above 53. Remember that, okay? You're going to lose massive theta unless you sell it today, or if you're planning to day trade it. I'm not sure if you swung it. If you swing traded that one, I don't think it was a good idea. 731 Microsoft 220 calls. I think that you should have bought in like maybe next week on Monday. I know you say stocks don't go always up, right up. They have corrective lines, but for Tesla, what's a good entry for shares? I mean, look at the extension, man. It's crazy. Let's do a little bit of a Mr. Fibonacci on this one. Well, from a lower swing to a higher swing here. Well, at least a 50% retracement from the highs. So you're looking at 1183 to be a key level for a bounce at least. Okay. But it's not going to just come down there like right away, right? It's going to take some time. It's going to do a little this, right? Something like that. It's not going to go like kaboom, it doesn't work that way, okay? So 1183 would be a ideal level to get in. It also coincides with the 50 moving average. So I would say this is going to take at least 2 weeks or so for it to come down. Now, if the market abruptly sells off, then you're in good luck. Okay. Smash the like button. Thank you for saying that. I appreciate you. If you're here, make sure you smash the like button, guys. When is the next class? We're probably going to take a break next week, and then there will be a next EGA mentorship class on, let's see, this Saturday, leave that one, on the 18th, I want to say. Sign-ups will be on the 18th again. We might, there may be, there's going to be an announcement made soon, okay? I'll make an announcement on Instagram, and then I'll make it on the live stream as well. And so that way, you know, you guys will be all ready for that, okay? But I highly recommend joining the mentorship program. A lot of testimonials for you guys to read, so go about doing that. Super informative. I hope we can continue doing this. That way we do not only depend on technical analysis, fundamentals super important to start getting used to. I'm very glad that you see that, Jonathan. Not many people see eye to eye with me on this, and people think that technical analysis is the only way to go and trade a stock. And you have to realize that, you know, it's basically a hand-in-hand thing, right? You can't be a doctor, not know the basics of medicine, and then look at somebody's lungs to determine what's going on with it. But then you also can't, you know, go the other way and learn medicine and then not know how to read the x-rays, right? It goes both ways. You need to be good at both, okay? So none is better than the other, but you need to be flexible, just like a ballerina trying to do a splitto. Good morning, Caprice. How you doing? Fire, fire, fire. Thank you guys for the fire emojis. I appreciate it. All right, let's see. JPM 98 calls 731. JPM. Yeah, looking about time to buy JPM now. I see financials will be the next sector that we can rotate in. Jorge, thank you for pointing that one out. 98 for the end of July, though. Yeah, maybe actually possible. I want to say. Yeah, I mean, why not? I see possibility. This is a pretty strong level of support here too, and volume's kind of consolidating. I think that we could definitely make a run up to at least 95, 96. So buying the contracts here would be a good idea. However, if JPM decides to dip with the broader market, which is the SPY, which will have a big a weight on the movement, then we'll run into problems with JPM breaking below. Then we'll go into the gap down here, which may take a longer time for it to go. So let's see what happens. I'm not going to take this just yet. I would like to see a break above $96 or $97 to see a upside for JPM. Okay, a break above $97 or so, and then I will take some long calls here for the upside to signify a trend change. Right now we're still in the downtrend. Remember, we have the death cross here. We have volume making lower highs, lower lows, right? We're still in the downtrend. Still in a downtrend. You can see that, right? And I will only bet on this when the trend changes, when we have a confirmation. Okay? Thank you guys for coming here to the stream. Welcome in. Remember to smash the like button, guys. Hit the like button. That's all I ask for. I appreciate you being here, taking your time to be here. And thank you for attending my stream. We do this every Monday, Wednesday, Friday. Let's see. You can sign up for that. Okay. Yep. I just said okay. Work August 21st, 34 strike. That's possibly a good one. Let's see. I like that you chose a further expiry. Thank you for doing that. August 21st, 34 strike. Okay. Yep, I think you can hold that contract. It looks like a good one. Looks like a nice swing play, in my opinion, right? You can see work has been trading nicely between these two levels here. You know, we've been using this level as a pretty good support here. So I think that it can definitely go up to 34. Buy your expiry. Hold that contract. I think that you will make some money on it. So good one there. That's another nice play. So far I have Snapchat and work to look at. What's your Boeing leap? I have, let me look at it right now. Hold on. I have Boeing. Oh, actually, it's in here. So let me show you. Come on, load up, man. Okay, let's go here. Scroll up. I actually called out 2 trades yesterday. So yesterday I was in 2 separate trades. The first one was here you go. Boeing 210 calls for November 20th. Okay. And here's the proof that I purchased the contract yesterday. So I post all the proof and everything on here so that you guys can, have full transparency. I don't want you guys thinking that I'm not in the trade. That was purchased yesterday. And even though Boeing is slightly down, it doesn't matter because it's a long contract, right? I also called out BABA, which is up nicely. I took a BABA call. It was a 250 call. The stock is currently trading at 245. It's up 3.6% after hours. This is going to open up nicely with the profit. So that will be the 2 trades that I called out yesterday. Let's see here. Do you think Walmart will hold above 128 or buy some puts? I didn't even look at Walmart, but yeah, that's definitely a grotesque overreaction. This is irrationality at its finest. It can hold above it depending on what news broke. I'm not sure what happened to the stock, but let's see. I mean, I want to say a retracement to at least 123 would be nominal here to the old resistance. That should be nominal. It should come down at some point. Nothing goes up in a straight line. So, yeah. You can buy puts if you want, but be cautious on it. Uber 34 calls 717. I actually like Uber, okay, secretly, but the problem is that it failed to break above this. I wanted to get Uber calls like 2 days ago. I made like a short, quick day trade on it, made some money on this run up here, but then now it's broken below again, so I'm a little dejected. Okay, let's see if Uber can break above this level. Let's see, extended hours. Yeah, it's already like looking like it wants to do that. So watch Uber for a break above this 33 level. I want to say a nice break above 34 would be a bullish entry with volume. MU 717, 49.50. MU 717, 49.50. It's looking bearish to me at the moment. Broke below this key support resistance here. This was a dual zone too, so I don't know, man. It's looking bearish. It looks like it wants to come down to 47, this level here. 47-ish. Work, I just went through work, right? Let's see. DXCM, what is that? Ooh, Dexcom. What is this? Manufacturers distributes continuous glucose monitoring system for diabetes management. Damn. Okay, I see you with the healthcare. Oh, DXCM. My bad. DXCM. Wow, that's wow. You said 450 for 717. Should I extend to August? Definitely extend to August, but it's looking bullish as heck. Oh, but no bounce on here though. Be careful, man. I say you sell the contract and wait. Don't even rebuy it yet. Wait for this bearish wave to play out first. I say the bounce is going to be on 413. You can enter somewhere here, or even here at 400. This would be the region where you want to enter. That's what I think. The non-break above this with low volume, that was the problem. You see, the stock didn't break above this resistance with good volume. Low volume here, no momentum to push the stock through. That's the problem. So expect the stock to fall on low volume, right? Expect the stock to fall either here or here would be the bounce. Okay. So sell the contract and then wait to buy the other one. Oops. Okay. I went through MU already. You're welcome, man. What is the best trend indicator? I don't use trend indicators. I use the vanilla old-fashioned technical analysis. I use support and resistance, moving averages, volumes. That's it. I keep it simple. I don't even use RSI much. I just, I kind of glance at it from time to time because it can be misleading sometimes. What is a leap? It's a contract that you buy that's 9 months, 9 months or more out. Your calls are too costly, bro. Well, then you got to save more money, bro. Because good calls and good contracts are more expensive. That's the way things are. If you buy short expiries, you don't get value. There's no intrinsic value in the contract. How are you going to make money on a contract that expires in a week? You can't. You got to get lucky, and that's the mentality that many of you guys take. You get into options trading thinking that you can buy cheap contracts and make $1,000 out of a $100 trade. I'm here to give you a rude awakening by telling you that if you do that for a long period of time, you're gonna blow up your account. I'm 100% certain of it. You will come back to the EGA live stream in a year from now and you will say, I should have listened to you. Because that's the reason why I frown upon people who take weekly expiries and people who take even the next week expiry. You're gambling. I'm just telling you, you're gambling. Unless you know something and you're day trading, you're gambling, okay? Because there is no intrinsic value to your contract. You need to understand this. If you fail to reach a strike, your contract is worthless. You lost all your capital. You don't have any risk management at all. You understand? Majority of you don't even set stop losses. So you need to understand the concept, okay? The problem is many of you don't understand the concept. So I'm here to educate you, and I'm here to tell you the hard facts and the truth. And if you can't handle it, then that's it, right? I mean, that it is what it is, man. But I'm trying to help you, that's all. If you want to continue down that path, I mean, I can't do much about that. But what I'm trying to do is help you fix that problem. I'm trying to warn you that I've made those mistakes in the past and you shouldn't. I'm trying to teach you what my mistakes were. So if you don't want to follow, that's not my, my prerogative. It's your choice, your money at the end of the day. The thing is, you'll keep coming back here and putting in your weekly expirations and keep losing, and that's just the way things are going to go. It's just going to be that way. Walmart news yesterday was they're rolling out a platform to compete with Amazon. Ooh, okay. That's interesting. Well, I would wait for a pullback anyway, Paolo. It doesn't seem like, it's going to keep running like that. Remember, nothing goes up in a straight line, right? So even if it went up like $1 billion over one day, this is a pretty big increase in a day, right? Don't expect it to keep going up. Remember, it has to pull back at some point. Bears have to take over and take control, push the price down. Whenever there's an irrationality on a buy side, there's always an irrationality that follows on the bear side. So watch for the irrationality to follow on the bear side and then get in, right? Okay. Space 17 call. This is the last one I'll do. After that, we're gonna end the stream. Space 17. I haven't even looked at Space in a long time. Thanks for telling me about this one, Chris. Space 17 call 717. Your expiry once again is a bit too short, man. Okay, but you see, the fact that you chose a $17 call, that makes it a little okay, right? Because this is realistic goal to hit within that time period. It's when people take like a $20 call and they're like, next week expiry. I'm like, dude, come on. Are you serious? You're gambling. Like, what you're doing is you're hoping for a stock to hit up there, and your contract doesn't have any intrinsic value, so you're betting on full extrinsic value. You're betting on a complete whim, okay? You're saying, I hope and pray that this happens, without taking a calculated guess, okay? So that's the difference between a trader and a person who's just gambling, okay? You got to take an educated guess. You got to use probability and statistics. And this is the method that I teach my mentees on the Everyday Growth Advisors Mentorship Program. Okay? So with that, I leave you guys to have a great Wednesday. And I will see you on Friday for the recap. Remember to like the stream, guys. I would really appreciate if you like click the like button. Will I take profit on the 250 BABA today? Maybe, but I may actually hold it because it just barely broke out. If you look at it, it has room to run, okay? The stock has room to run. It can keep going. It's broken out, it can keep going. Let's see how far it can push up. I'm gonna, instead of me taking profits on that, Howard, what I'm gonna do is set a stop loss, and I'm gonna set it above my purchase price and lock in 20 to 30% of my profit, right? And then, over time, if BABA moves higher, I'm going to keep moving my stop loss up. That way I don't leave anything on the table. All right? Cool. So I'm going to go do that right now. You guys have a great trading day. Thank you for coming into the stream. See you guys on Friday. I appreciate you being here. Click the like button. Subscribe if you haven't. We do this Monday, Wednesday, Friday. Come through. And I will see you guys on Friday. Have a good one, guys. Peace.